Rubrik just posted a remarkable quarter, really confirming their whole thesis. If you can guarantee resilience, modern enterprises will pay up.
They absolutely will. We're jumping right into the numbers for RBRK's Q3 Fiscal Year 2026.
And the headline is that they exceeded every single guided metric.
That's right. Subscription ARR grew 34% year over year to $1.35 billion. Total revenue, an even bigger jump, surged 48% to over $350 million.
This isn't just growth, though. This feels different. It feels like leverage is finally really showing up.
It is. Okay, so let's unpack the core Q3 metrics, starting with that scale and the move toward real profitability.
Right, the subscription ARR is great, but the acceleration in cloud ARR is pretty startling.
It's now $1.175 billion. That's 53% growth year over year.
53%. That velocity just confirms the whole cloud transition is working, maybe even better than expected.
It does, and that velocity is what's driving this huge shift in operating leverage. I mean, the bottom line is where this really shines.
Okay, talk me through that.
In the prior year quarter, they had a non-GAAP net loss of about 21 cents per share. This quarter,
They flipped it.
completely flipped it. A non-GAAP net income of 10 cents per share. That kind of shift is massive. It really signals a new maturity in the business model.
Yeah, a shift like that doesn't happen by accident, It has to come from real improvements in operational efficiency.
Exactly.
So what metrics tell us how efficiently they're converting all that revenue into actual cash?
The free cash flow number is the one to watch here. It was incredibly robust at nearly $77 million,
Wow,
which translates to a free cash flow margin of 22%.
22%. And what was it last year?
Just to put that in perspective, it was only around 15, maybe $16 million in the same quarter last year.
So when a company accelerates growth and dramatically improves cash conversion like that, it just shows they've navigated that tricky transition away from perpetual licenses.
They've paid the upfront costs, and now they're reaping the rewards of the subscription model.
And if we drill down even further into the unit economics of the subscription engine itself, we have to look at the subscription ARR contribution margin.
Absolutely. This is probably the clearest measure of the underlying profitability of their core business. A year ago, this metric was negative.
Right. It was minus 3.3%.
And this quarter, it improved dramatically to positive 10.3%.
So that swing from negative to double-digit positive, that's textbook operating leverage at scale. They're shedding the old inefficiencies of the appliance model.
And it seems to be directly linked to their growing customer scale. They now have over 2,600 customers spending more than $100,000 in subscription AR.
A 27% increase year over year. That's the kind of stickiness you want to see.
It confirms that when enterprises come to Rubrik, they commit serious budget. They're moving multiple workloads, which, leads us right to the big question of why. What's convincing these huge customers to go all in?
And this is where it gets really interesting. They're positioning themselves at the intersection of security and AI. Their mission is, and I'm quoting here, to secure and accelerate the world's AI transformation.
But the philosophy underneath that is even more important.
Right.
It's this acknowledgement that cyberattacks are inevitable. Prevention and detection are not enough.
By taking that stance, they completely shift the conversation away from, traditional firewalls that often fail and toward guaranteed recovery. Cyber resilience becomes AI resilience.
It's a powerful position to take. If you tell a client that failure is a given, your recovery platform suddenly becomes indispensable, doesn't it?
It does. But I have to wonder, if prevention and detection are truly not enough, does that mean Rubrik is actively taking budget away from traditional security vendors? Or are they carving out a whole new mandatory spending category?
The sources suggest they're doing both, really. They're carving out this new resilience category, but they're also displacing legacy backup vendors who just can't handle modern cyber recovery.
Because they offer a true platform.
Exactly. A single platform for enterprise, cloud, SaaS, identity providers, integrating data, security, and AI into one layer. It becomes a necessity.
And the external validation is there.
Ah.
IDC named them a leader in the worldwide cyber recovery marketscape for 2025.
Right. But analysts are one thing. Customer happiness is often the truest indicator. And they're touting a net promoter score, an NPS, of over 80.
Which would place them in the top 1% of enterprise software companies. That number is it's almost unheard of in this space.
It is.
I have to push back a little. Are we sure this is a standard calculation?
Yeah.
An NPS over 80 for enterprise software that, fundamentally deals with system failures seems incredibly high.
And it's fair to be skeptical, but the context is everything here. Think about it. A customer gets hit by a devastating ransomware attack. Their world is on fire.
Okay.
And Rubrik comes in and performs the recovery flawlessly. That success generates an incredibly high emotional score. Their product's success is tied to preventing total operational paralysis.
So it's less of a general satisfaction score and more of a highly specific resilience success score.
Precisely. And when you see that 27% growth in six-figure customers, it all lines up. This is a must-have tool that delivers on its biggest promise.
That makes a lot more sense.
Yeah.
Okay, let's transition to the products that are actually feeding this growth model. They have two main suites, Rubrik Security Cloud and the new Rubrik Agent Cloud.
Let's start with the immediate threat. Identity resilience. The hook they use is so precise, attackers don't break in, they log in.
And that phrasing just perfectly captures the modern attack vector. The source material says 90% of IT leaders agree identity-driven attacks are their single biggest threat.
Exactly. And this identity business, which only launched in December of 24, is already at $20 million in subscription ARR.
And they doubled the customer count last quarter alone.
They did, and 40% of those were brand new customers, what they call next-gen buyers, who are only focused on modern security.
That rapid adoption just screams that this is a huge current pain point. Their solution focuses on recovery across Active Directory, Entra ID, and Okta. Why those three specifically?
Because they're the keys to the kingdom. They are the control points for almost every modern enterprise. If an attacker compromises your Active Directory or your cloud identity, they own everything.
So Rubrik isn't just backing up data, it's recovering the identity infrastructure itself.
Yes, and they just enhance that with a deeper integration with CrowdStrike Falcon's Identity Security Suite, creating this really tight solution for both detection and guaranteed reversal of identity threats.
Okay, that's the security cloud. Let's pivot to the more forward-looking piece,
Mm-hmm.
the Rubrik Agent Cloud for AI. What's the problem they're trying to solve here?
It's the huge uncertainty businesses have as they rush to deploy these powerful, autonomous AI agents. There's this fear of agents hallucinating or making mistakes that could cost millions.
The 100x risk, they call it.
Yeah, the risk of an AI agent accidentally deleting critical data or escalating its own permissions. This is the resilience layer for the AI age.
And they have three core functions to achieve this.
Right. First, just gain visibility. You have to know what agents are running and what data they're touching.
Makes sense.
Second is monitor and validate. Basically, enforcing guardrails and policies in real time so the agent can't go rogue.
And the third, and for a resilience company, the most critical function, has to be remediate and rewind.
Precisely. The ability to just undo an agent's mistakes. If an AI deletes 10,000 records, you need a guaranteed rollback. It's an insurance policy for AI automation.
But wait, that implies a huge degree of trust in Rubrik's platform to manage these high-velocity AI agents.
Yeah.
Is the market really ready to trust a third party for real-time remediation of generative AI?
That is the billion-dollar question, isn't it? But you have to look at the alternative.
Which is?
An uncontrolled fleet of AI agents running your business. That risk is clearly too high. Rubrik is leveraging its trusted position in data recovery to make the jump into agent control. They're selling governance for the AI era. It's a compelling pitch. Okay, let's move to the future. We need to nail down the updated guidance for FY26 and get into some tricky modeling nuances for FY27.
Management is clearly optimistic. They raised the full-year outlook across the board. They're now expecting subscription ARR between $1,439 million and $1,443 million.
Then total revenue.
Raised to between $1,280 million and $1,282 million. And importantly, free cash flow is expected to be very strong, somewhere around $200 million for the full year.
Those are strong numbers. But looking ahead to FY27, there's a nuance around something called material rights revenue. What exactly is this, and why is it so critical for understanding next year's numbers?
This is crucial, so let's slow down here. Material rights revenue is basically a non-recurring revenue stream. It's tied to subscription credits they offered legacy customers.
To get them to switch from old hardware appliances to the cloud subscription.
Exactly. It was an incentive that massively accelerated their migration to the high-margin cloud model. A very successful one, I might add. So it's a one-time accounting boost that actually comes from a good strategic move.
Precisely. It contributed about $25 million to revenue in this quarter, and they expect it'll be around $68 million for the full year. But because the cloud transition has been so successful, that revenue stream is going to see a substantial reduction next year. It's basically going away.
Wait, so just to make sure I'm tracking this for you listening, this temporary revenue boost is a good sign because it means the cloud transition is working. But its disappearance creates a messy headwind on the P&L next year. Is that right?
That's exactly right. The critical takeaway from modeling FY27 is this. The reported revenue growth will likely lag subscription ARR growth by a few percentage points, purely because that one-time revenue is vanishing.
But the underlying business is healthier.
Right. If you look at the normalized revenue growth, the core recurring business health, it will actually be ahead of subscription ARR growth. So don't confuse an accounting headwind with a business slowdown.
That is a vital distinction. Any other modeling notes on seasonality for FY27?
Yeah, just one. They expect seasonality to normalize, projecting about 40% of net new subscription ARR in the first half and 60% in the second, so a bit back half weighted.
So to sum this all up, Rubrik is showing strong leverage growth by making its platform indispensable. They're not just protecting data anymore, they're guaranteeing operational resilience against today's two biggest IT risks: identity-based attacks and the proliferation of AI agents.
That's the core synthesis. And here's a final thought for you to consider. Since Rubrik's whole business is tied to the inevitable risks of the AI transformation, how should you view the stability of their recurring revenue? I mean, is this different from traditional discretionary software spending?
Is the cost of guarantee recovery in the age of AI becoming a permanent, non-negotiable line item in the enterprise budget?
That's the question.
The market is certainly treating it that way right now. Thanks for breaking all this down with us today. Keep applying the synthesized knowledge, and we'll catch you on the next one.